Hello and welcome to another episode of the Investor Financing Podcast. And we are back with what's going to be another great interview and something we haven't really talked about on the show to date. And we're going to be talking about commercial real estate for healthcare organizations. And we're going to meet Austin here. Austin's got a pretty interesting background. He's not only a real estate pro, but he's also a professional wakeboarder and also a professional ninja warrior. So if you guys have watched Ninja Warrior, he actually competes in that. And I find that amazingly fascinating because that's a really awesome thing to watch. Like, it's one of the only few things. I'll watch that and I watch the UFC. Everything else I'm not interested in watching because I love to watch those kind of shows. So it's great to have you here. Austin is also the host of Commercial Real Estate Secrets Podcast, a show that focuses on helping healthcare organizations scale by interviewing successful entrepreneurs and diving into actionable strategies. Leaders Real Estate helps all types of healthcare organizations grow by developing creative real estate strategies, identifying the best locations, and providing capital for building purchases. So welcome to the show. It's going to be great to talk about all these amazing things that you've done with your life, and kind of take us back how you got into real estate and, how you got into this whole American Ninja Warrior. I know it's not real estate related, but I think it's interesting to see, you were obviously very athletic with your wakeboarding career. So what kind of got you into the real estate world?
Yeah, I feel like it's a cliche answer, but it was really reading the book Rich Dad Poor Dad. I feel like so many people read that book and decided to get into it. But yeah, that's what it was for me. I was kind of into self-development, at a young age, like around 17, just trying to fine tune my career, like my wakeboarding career. And I was working on my mental game and my competitive advantage. And that kind of led into self-development books, which talk about business and real estate and making money and all those types of things. And so, yeah, I just, they did go a little bit hand in hand actually, because when I was wakeboarding, I was looking for houses to rent on the lake, and I would look for roommates to come in who wanted to wakeboard as well. And I would rent out I'd sign the lease on the house, I'd take on all the risk. And then my goal was to rent the rooms out on a per room basis to offset my rent. So I could essentially live rent free. So it's kind of like a trade-off. I signed the lease, I took on the personal liability, and then I would have other people signing the lease to me to pay for my rent. It worked really well. It allowed me to save up, some money and buy a house relatively early on. And then I started doing that same strategy where, I was on the lake, I was wakeboarding and stuff, and I would get wakeboarder roommates, and they'd rent out the different rooms, and it would, it would cash flow every month. That's kind of how I got into it. And that's kind of how those two things overlap.
Wow, that's pretty cool. Yeah, I could kind of see a vision that you could be do the Airbnb, you buy these lakefront houses, you have the wakeboard, the boat, and that's kind of like the Airbnb experience. Have you ever thought about doing that? That's
what I did at first. Yeah, the problem is boats are really, really high maintenance. So it's anytime you have anything with the motor. So I had two nightly rates. I had the nightly rate for the house, and then I had the nightly rate for the house with the boat, and I was significantly more expensive. But after 2 or 3 times where, I was having maintenance issues and, the people were getting upset and I had to go figure out what's wrong, I was just this is too cool. I'll just rent out the boat separately. So in theory, it is a great idea. In practicality, it just is a little bit more difficult.
Like anything, that's pretty fascinating. Then just a little briefly, how did you get into American Ninja Warrior?
So yeah, I did wakeboarding until about 2017. And then I had the fitness centers. I actually opened those up while I was still wakeboarding, but I sold those in 2019. And then my wife really wanted to get in. She was really into fitness and she wanted to go try it. And so reluctantly, I was like, oh man, I just retired from a sport. I don't want to do another sport, but I'll try it. And so we tried it for a couple of weeks and we were just totally hooked. And so we have a really great gym here in Orlando. The Rocker Ninja, RJ Roman, we train with him a lot. He's part owner of the gym. And you guys may or may not have heard of him, but 3 days a week we're there, 1 to 2 hours at a time. And yeah, it's been going really good. Was on the show last year, and then I got the call to be on the show again this year. So fingers crossed.
That's awesome. I'm gonna definitely watch it now that I actually know somebody that's on the show. It makes it even better. All right, let's talk about and obviously Commercial Real Estate Secrets Podcast. Give me a little framework about that, how you started that, and just kind of what a listener could learn from listening to the show.
Yeah. So how I got into that was when I had the gyms, I had some fitness centers around Orlando. I was looking to grow those. And that's when I met my partner now. And so he went through and helped me identify new locations. And we went through this like really deep dive analysis. So like in the past, I kind of had this idea of places that I wanted to go to and places that I didn't want to go to. And I had a gut feeling about certain areas. But they went through and they added we did a category, 7 different categories. Each one of them had a scorecard. We added them all up. And then what I found was the places that I didn't feel so good about all of a sudden looked really good. Places that I felt good about all of a sudden didn't look so good. So my gut feeling wasn't really right. And as much as I thought it was, but I had clarity, right? And I was really impressed with their process and the way that they did things. So luckily I sold the gyms before COVID, like June of 2019. Actually, November of 2019 is when I sold the last one. And it was just a huge blessing there. And so I started working with my partner full time. And we took that strategy around to help people, specifically healthcare organizations. And we do a lot of retail, so it's not 100% healthcare, but anything like sub 10,000 square feet will help them find the location. And so, a lot of times, there's only something available to buy, right? They can't lease anything. And so in those situations, we go in, we purchase it for them, and we'll do a lease back.
That's awesome. So you're helping them expand one way or the other. Well, whether they're ready to buy or do like a lease back type of deal, and your team will purchase the property. And so you help them from A to Z. You help them identify the location. Probably, do you ever have to get involved in the tenant improvements? Do you kind of manage that process as well of the property?
Yeah. So if we're leasing, if we're brokering the transaction and they're going to be leasing, then we'll help negotiate the whole thing, right? So we're trying to get them the best deal possible, because it's kind of funny. Like, if you don't have a broker that you work with all the time, then your incentives don't actually match. So if you're the tenant and you're working with a broker for a one-off deal, the more you pay in rent, the longer the term, the more commission he makes, right? And so a lot of times we work with groups who are growing, and so we're trying to build like a long-term relationship with them. So we're trying to actually get the rent cheaper, and we're trying to get more incentives for them. Even though it hurts our commission, we know that if they're profitable, they're going to go out and do more deals. And it's way better to have multiple deals than it is to try and just max out like the amount of commission you're going to make off one deal, right? And then squeeze them dry. So it's more of like a relationship building process. But we'll help try and negotiate the TI. We're trying to negotiate the terms, responsibilities, personal guarantees, HVAC, all that sort of stuff. And then of course, like if we end up buying it, then we become the landlord in that situation. But it's still the same thing. We're still trying to make favorable terms so that they can continue to grow and expand, and we can continue to do more deals with them.
And it seems like from like a financial standpoint, you're going to run an analysis like, hey, it's, rent versus owning. Here's your financial decision, right? And oftentimes some of these businesses probably can get SBA financing because it's owner user. Do you guys do ground up projects now, or is it just value add type of?
Yeah, we do ground up projects. Yep. Yeah. So you're right. Like if a healthcare organization wants to own their real estate, then there is the SBA route, and they could absolutely do that. The problem is though, depending on how much you're trying to scale, the amount of debt that you have could be holding you back a little bit, right? And so when you get too much debt on your balance sheets, then the banks might be reluctant or hesitant to loan to you. And so you might not be able to scale as fast as you can. And when it comes down to it, like, what are you making more money doing? Are you making more money on the real estate, or are you making more money in your business? And if you're, 9 times out of 10, you should be making more money doing your business, right? Like your ROI could be 30, 40, 50, 100%, depending on what kind of value adds that you do once you acquire a practice or open a new practice. Real estate, obviously you can make great returns, like that's our business, but they're not going to be as substantial probably as if you really optimize a healthcare organization. So what we do is we, looking at it through that lens, a lot of times it doesn't make sense to buy or to lease your locations. Like it depends, right? Like if you are happy growing at a rate of 1 to 2 locations a year or less, then like you can probably afford to own the real estate. In that situation, we'll just help you broker it, right? But we'll do ground up developments if we're looking to go to a spot and there's nothing there, and we know exactly, like we've done the demographic analysis, we know exactly where the best spot to go is, and nothing is available for lease. So we can buy and convert an existing building. We could buy an empty pad and build it from the ground up. And the numbers are all transparent from the beginning about what it's gonna, like what numbers we need to hit for our partners in order to justify the deal.
Right, and I'm sure there's some strategy, like when your organization is the buyer, what's are you guys usually looking to like refinance and kind of almost like burr the property where you're getting money, your capital out like year 3 or 4? I mean, is there like a strategy where the healthcare organization knows like, hey, this is our plan. We're going to raise rents, year 3, sign a longer term lease to create more value? Is there strategies that you guys implement where you can kind of force appreciation and then refinance out? Is that kind of a method you're looking to do?
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Hi, this is Beau, host of the Investor Financing Podcast. I appreciate you checking out our channel. On this podcast, we talk about real estate, investing, financing, business lending, and acquiring and expanding your business. I'm sure you will find some videos here that will help you build your business empire. There's a lot to see. Take your time and make sure you comment, like, and subscribe. Thanks again. So anyways, I think we left off and I was asking you like the strategy when your organization is actually buying it. Is there like a way that you guys can force appreciation in maybe year 3 or 4 where you have like a rent escalation clause in your model where then you refinance and kind of capitalize your initial equity injection?
Yeah, well, so cool thing about our model is that we are looking, almost explicitly for value add stuff. Not, there's always exceptions, but if we're developing at like a 2% cap rate, like I was mentioning earlier, if we're getting a 2% cap rate spread, so there's immediate value add once we've built that building. It's kind of like the metrics that we use. One of the criteria that we use, that we operate our investments on, is making sure that there is some sort of value add. If we needed to refinance right away, then we can. And so it's just situational whether we refinance or not, because when you think about refinancing, your ROI goes up, which is great, but your cash flow does go down a little bit. So it's like, for instance, you give the building costs, 500 grand, right? You're just using round numbers. You need 100 grand to close. Your cash flow is going to be whatever, like you just throwing out random numbers, say it's 10%, right? If you refinance, then you're going to your 10%, which would be 10 grand in that situation, would lower to maybe 5% or 4%, but you can get almost all of your money back, right? So like you're lending out 100 grand for a short period of time. You're getting that money back, and now you're still collecting that 5,000 or 6,000, 4,000, whatever it is, like kind of like indefinitely. I mean, I'm sure you guys your listeners are probably familiar with the refinance process, but that's the idea is, that we can do that, get the majority of the capital back, and then now we can start replicating that with other deals. Creates like this sort of infinite scalability.
Oh, that's awesome. Now I really got a good grasp of it. So really, your value proposition, put aside the real estate, is that you're helping these organizations grow their business, finding the premium locations, which is going to drive revenue for whatever the location, with their clientele, they're going to be able to grow their business. And a lot of times they don't care about owning the building. They just want that prime location. They're okay with the lease, what the lease is going to be. And then on the other side of it, you help facilitate that transaction, but you have your own business model where it's like, hey, this is our business model. And what you're really doing is sourcing the best tenant possible, and then kind of reverse engineering it. That's a really smart business model, and it's helpful for them. It's helpful, obviously it's a profitable business model, and then doing value add, get your money back out, recycle the money into it, and helping these healthcare organizations continue you can rinse and repeat over and over and over again. Wow, it's fascinating because I never.
Thanks. And it sounds easy, and when it works, it seems easy in hindsight. But like everything, it's a spectrum of time and money, right? And so when you're looking for deals, it takes time, and it takes a lot of relationship building. And so that's every business is relationship building, but it takes years. When you're dealing with multi-million, $50, $100 million companies, they're putting their trust in you. Like it takes a long time to earn their trust to be able to buy their buildings or broker their leases or that sort of thing.
So now I'm sure because you have a track record, you have a built-in book of business, people are coming back to you, but you're then outreaches to these organizations like the CFOs and the controllers that are looking to grow, and then they get word of your skill sets of what you do. Is that how you pretty much you grow your clientele that way?
Yeah. Yeah. In-person meetings. People will introduce other people to recommend them to be guests on the podcast. We'll go to the trade shows. We'll set up there. We have other like good people that we have relationships with that we will network with. You name it, and we're trying it, and we're open to try it.
And what are your plans for the future as far as expanding your business? Are you working on any different? Is healthcare where you're going to stay focused, or is there any other business types that are you going to kind of replicate this model with?
Yeah, so we've done some stuff with movie theaters, big movie theaters. Healthcare is a little bit more of a blue ocean, but it's becoming less and less true. We've looked at some stuff. Like one of the deals we did was a physical therapy and a Starbucks. So they're, Starbucks is obviously not medical, but they're leasing our building as well. So it's situational. Like whenever the opportunity comes up where it makes sense, we'll do that. But it's mostly probably we're going to focus on the healthcare, and then if we get other tenants like that are synergistic users to what we're focusing on, then we'll bring them on as tenants to help the healthcare people who are renting the building from us to begin with. So the other thing though, like in terms of the business that we're working on is the tokenization fund. So like we're in talks we're trying to put together a fund right now. We've been talking with the lawyers. Of course, it's always more complicated than you think, but essentially it's just like having shares in a fund, like a real estate fund. Not, you have your REITs, your real estate investment trusts, those are publicly traded. It doesn't have to be that complicated. You've got funds where people can buy shares of funds. So the only difference is when you use the tokens on the blockchain, they're extremely liquid. So like, traditionally, if you wanted to participate in a fund, you pay 50 grand minimum, 100 grand minimum, whatever, 25, whatever. Your money is tied up in that you got X amount of shares for who knows how long, right? And it's like very difficult to sell them. You might have to get approval from the main guy. So it's like if you're using tokens, then they can sell them whenever they want, right? If they appreciate in value, they can sell them right away. They just have to have somebody that can come buy them. So it just kind of streamlines that whole process and creates more liquidity around it.
Wow, that's interesting too. Like the world's changing so fast, but with the, it makes sense, like to be able to, because that's been the problem in like previous deals, like people get involved in syndications and they can't get out because it's a 5 or 7 year play. The tokens are going to make investing more fluid and liquid. So that's fascinating. So that's really cool. So find out more about yourself. Obviously, go to Commercial Real Estate Secrets podcast. You can find it on probably Stitcher, iTunes, all those platforms. Your website is leadersre.com. I'll put a link below. Any closing words for our audience about the commercial real estate world? If maybe they're a residential investor and they might want to start branching out into the commercial space. Yeah,
I mean, I know the market seems high right now. History hasn't bode well to those who try and time the market. Like I realize it could go down. I don't know what's going to happen in the future, but it could not. By the time we have a 20% correction, the market could have appreciated 30%, right? And then we're still 10% higher than we are today. So I can't predict the future. We just look at the fundamentals. We look at, can this building cash flow? Like, is there a tenant who's going to be paying enough for us to service our debts? And do we have enough equity in the building if we had to sell it that we could avoid, like personal guarantees or catastrophic losses? So as long as you've got a little bit of equity in the building, as long as you can make your monthly payments, then it doesn't really matter what the real estate market does to an extent. So that's kind of our thing. We're making sure the fundamentals are there. We're checking those basic boxes, and we're going to continue to move forward, because we can't just sit on the sidelines. So I know some people are thinking, I'm going to wait, I'm going to time the market, I'm going to wait for it to go down. Historically, a couple people have gotten that right, and they've been rewarded very well. But most people have gotten it wrong, and I don't pretend to be that smart. So we're just going to keep moving forward with it. If anybody's interested and, they want to invest in some of the projects that we're doing, happy to, if they want to go on the website, shoot me an email, happy to have a conversation with them.
Perfect. That's great. Yeah. And I like the model a lot. It's been fascinating because, it's like, who your tenants are and, they're, highly rated. It's not like some fly by night. And really in the commercial triple net lease world, right? It's all about the tenant, like their strength, their financials, the term of the lease. It's a lot different than residential space. And you can create a lot more value, potentially a lot faster. So it's interesting.
Residential is great. I got 3 Airbnbs personally. I like it. I'm bullish on the space, but yeah, it's different than, it is more work. Like you're running a little mini business. I mean, I laugh at the idea that somebody calls Airbnb passive income. It's really not. But with commercial, Yeah, it's just based on, yeah, like you said, the length of the lease, the credit of the tenant, and a couple other factors that are really the main driving forces.
Awesome. Well, really appreciate it. And we're going to all look for you on American Ninja Warrior. We're going to go back to the season from last year and look for you. But good luck on this season. I hope it pans out and you win the don't you win a lot of money if you win the whole thing? It's like,
it's unlikely. I like to say that I do commercial real estate for income and ninja for expenses.
Yeah, but it's a good kind of opening, right? The open up. Oh, you're American Ninja Warrior. Oh my God.
It's a great conversation starter. That's for sure.
Yeah, awesome. Well, thank you guys. Appreciate everybody watching the show. Please like and subscribe. You'll have Austin's contact information if you're interested in speaking with him and sending him an email. So thank you. We'll see you on the next episode.